Today is Sunday, February 28th, 2010. This is Nicholas Salisbury here, and we're going to take a look at the British pound Australian dollar. We've seen a lot of downside lately in the pound Aussie, and I think there's still a lot of potential downside here, which is what I'm going to explain to you. So this is a monthly chart right here, and what we can observe from here is that there's actually a double top that occurred. We have a top here where prices were rejected off of the 278 and 290 level before returning down to our psychological support level here at about $2 even. You can see how strong that support level was from 1986 until 1996. Prices were unable to penetrate that level. There was a little bit of a whipsaw here, but prices did recover higher all the way up to the $2.90 level. And then we also have our second top here from 1998 through 2002 off of the $2.90 to $3 price region here before prices once again return lower to our psychological support level at $2 even. Prices were rejected and returned all the way as high as $2.70. And then of course rather recently we've had our breakout below the $2 support region price area between $1.90 and $2 even. So we've definitely had a substantial breakthrough that support region, definitely enough for us to warrant a breakout of the double top formation. So we definitely have a validation of the double top since we've come below that support region. Actually, looking at the chart, we can see that our next area of support is probably going to be at around the $1.58 level. This is where prices consolidated a little bit back in 1985. So we're actually seeing levels that we haven't seen since about the 1985 and before. So what the double top can do for us is that it can give us a little bit of a glimpse of what we're probably going to be seeing in the future. It can actually give us a price target on where we can expect prices to be going over the next weeks, months, and possibly years. So what we do is we actually take the distance from the support region to the top, and we're actually going to project this distance down lower to get our price target. So from the $2 to the $2.90 region, that's basically about 9,000 pips. So technically we'd be looking for about 9,000 pips of downside below $2, which would put prices at about the $1.10 level. If you were looking for a conservative profit target, you might consider this top here, I guess, at about the 278 to 280 level, which would be about 8,000 pips of downside still, so it still put prices at about the $1.20 level. But definitely, we're at $1.6984. There's still a lot of downside that I would be expecting from this pound Australian dollar, and I really would not be surprised to see this decline a lot faster than we've seen the prices move, because usually when breakouts occur, they occur much faster than when prices bounce between support and resistance levels, as we see right here, where prices take about 10 years before they even start moving up. I really wouldn't be surprised if our movement down to the $1.10 level happened within the next 2 years. So let's go ahead and look at the daily chart so we can get a look at, or get a little bit of a feel of what's going to happen over the next couple of days and weeks ahead, since we now have our longer term bearish view looking at the monthly chart. So let me go ahead and pull up that chart. Okay, so here's the daily chart of the pound Australian dollar. We can see that prices hit a low here in early October at about $1.73, and then continued to consolidate between that low of $1.73 and $1.83, basically in a 1,000 pip range, until just recently here. we've had our breakdown below that level, and we had a close below that level, which shown some sustained movement below the $1.73 support. Then we had prices come back up and retest the $1.73 support, which now started to act as resistance, which usually happens with support and resistance levels. And now prices have turned off of that region and are continuing down lower. And there's a number of ways that we can look at this. As we saw on our monthly chart, the next real area of support that we'd probably be looking for would be about at the $1.58 level, which would still be about 1,200 pips away that we would be looking for. Also, if you look at this as a flag formation, you'll see that prices, this would be the flagpole right here, and we would also have the flag, and prices broke or came down from $2 to $1.73, which would be a 2,700 pip movement. And if we projected the 2,700 pip movement from here, from $1.83, we would get to about a $1.55 price target, which would actually be a little bit below $1.58. Or we could also look at this as a rectangular consolidation formation, which would project the distance from $1.73 to $1.83 and be looking for our next support level at about the $1.63 region, since this was a 1,000 pip range, which would still give us about 684 pips of downside. But once again, my profit target for this pair is $1.58. I think this is where we're going to go before we see at least some real support. And there's also a lot of fundamental reasons behind this depreciation in the pound Australian dollar. You have the pound, which has been using a lot of quantitative easing measures, which injects a lot of British pounds into the marketplace, which of course brings down the value of the pound when there's increased supply. We also have the Australian dollar on the other side of the equation. Australia has been raising interest rates for the last few months, which has actually increased the demand for the currency. So you have increasing supply on the pound side, and then you have increasing demands on the Australian dollar side, which can translate into a depreciation of the pound Australian dollar currency pair. So that's what I have for you right here on the videos. You can go ahead and read the blog and let me know if you have any questions. And thanks for watching the video.